Today's the last day of the quarter. It's Tuesday, March the 31st. The Dow was down almost 2%. Started off going down, but it turned nicely past its low of yesterday, or its close of yesterday. And then about noon, it just continued to tail off. But look at the volume. The volume was particularly low. Not a lot of stocks were in the green. And here's the volume that we're tracking from the McClellan site, the New York Stock Exchange up volume and down volume. And you can see the up volume was the same as yesterday, but the down volume was higher. But it's still a lot less volume than we've seen in the past 2 weeks. The McClellan indicator, as a result, stayed pretty much where it was, had a 122, 126 value, bringing our summation index a little bit lower, but not perceptibly lower. It's really moving at a very slow rate. And you can see on this chart, it's just slowly ticking up, but it's hardly moving at all. Not a real lot of motion, but it is going in the right direction, but extremely slow. And because of the volume, we can expect that it's going to continue that way. The volatility indicator, the VIX was down a little bit today. The S&P ended up down 1.6%, and it was just continued rejection at this 38.2% of a retrace back from this low to the all-time highs. So our all-time high on February the 19th out to March the 23rd is where we had our low. So that's about a month, and we've recovered only 38.2% of that. The Apple experienced a little bit of the same. We've got some Woody's pivots drawn in here because they're helpful to look at, but not so much on a daily basis. This just showed that we moved between the pivot point and the resistance 3 level. You see it much better if you go to a 15-minute chart, and you can see that we, where's the pivot point? Right here. We came to the pivot point at 2 o'clock. We came to the pivot point at 3 o'clock, and at one point we went as high as 261.75 and hit resistance on the 3 pivot point. But we're looking, let's take a look at that very same Fibonacci that we looked at on the S&P. And let's take the all-time high close, which was on February the 12th, and we'll take this low value here because it coincides with one of our green line support areas. And you can see that we are stopped also at 38.2%. So Apple is behaving just like, let me get rid of the Woody's pivots here so you can see that a little bit more carefully, closely. We stopped at the 38.2%. Now we've been there for 4 days preceding. That's 5 days at 38.2%. And if we look back to March the 17th, we were there as well. That was a Friday. So that's been a resistance area where it needs to break. But the volume is just like a ski slope. Continuing down, we're going to see that same type of volume profile with Caterpillar, although Caterpillar had a bit of a bump today, and it was one of the few stocks that was up. In fact, it was up 3.66%. We should really check and see what news drove it up, because I can't imagine that Caterpillar machinery is going to be in much demand until people get back to work. But there was talk about a new infrastructure spending plan, which Trump has floated, but apparently the Senate is in no mood to spend more money after having just dug in $2 trillion beyond their means. And that isn't $2 trillion over 10 years, it's $2 trillion that's going to be spent in the next few months. The gap here has a top at the 50-day EMA, so that's going to be a hard stop, and it's also where we've got a green line and this level of support that's been acting as support and resistance since November of 2018. So we could see a sprint up to 118.85, but it's going to take quite a bit for it to move beyond the 50 and the top of the gap. There's going to be some selling at this point, absolutely guaranteed. Coca-Cola down $1.10. 38.2%, although it did That's the wrong Fibonacci. We want to start now looking at how well are we retracing from the highs, and we stopped at 38.2%. The REITs had a bit of a drop. They did yesterday and they did today. Now, AGNC is a real estate mortgage trust, and it works only with federal-backed mortgages. It's the mortgages that are not federally backed, and some of those REITs are declaring that they have to drop their dividends, and they have had to sell a lot of their property to make their margin calls. Real estate investment trusts make a lot of money by borrowing money and going and buying mortgages. And then when their margin is called, when their stock loses a certain value, then they have to sell some of their properties. Now, that's not the case for a federally backed lot of mortgages like AGNC, which the government has pledged to buy back in order to keep the market afloat. So I think when people catch on, AGNC is going to rebound, but it's also stuck at, well, that's 38.2%. Yes, 38.2%, like all of our others. AT&T announced its dividend yesterday, but that didn't stop it from tanking a little bit today, down 3.4%, so worse than the market. And look at the volume again, the same ski slope volume. It looks like one of these Norwegian ski jumping tracks, doesn't it? And that's what we saw in some of the other stocks. Home Depot was a big disappointment, down a whopping $10, 5%. Let's draw our Fibonacci there from our high of February 25th to our low of March the 18th. And that stock's done a little bit better, getting rid of the Woody's pivots here. That stock's done a little bit better and has retraced half of its loss. So perhaps that's part of the reason why it pulled back today, but not to worry. There was no corporate involvement here in the selling. It's just pathetically low volume. I'm just fortunate that all of my stock is covered by short calls. So on a day like today, I really didn't suffer very much except for AGNC, which I don't have short calls on, but I do for Apple. I didn't for AT&T either, but it's probably time now to take a look at AT&T and look at maybe some $35 September calls and see if there's any value in selling some of those. Whirlpool down $2, still a disappointing stock. So that's it for today. The S&P now is meeting resistance at this 2650 point. There aren't any significant gaps to be filled. This gap is pretty much filled by a wick and a tail. This gap, you could say it's filled. I mean, there's a little tiny bit of a gap here, not enough to be a big pull. It's this gap down here that I've got my eye on, which would cause us to retest this bottom. And that's really where I think that we're going next. And the lack of volume is telling me that there's a lack of commitment to selling, but there's also a lack of commitment to buying. And best case is that we channel for a while and work off some of that nervousness. So we're either going to drop and work it off quickly, or we're going to just channel for a period of time. And to remember that discussion, let me just draw a little channel here on the chart, and let's see if we don't experience just that, with 38.2% being pretty much the top of our channel range. So let's keep an eye on that channel for a while. So that's where I think we're going, channeling or going down.